Welcome to your virtual CFO coach. I'm your host, Leah Torbert, founder and CEO of Harrington Strategic Partners. I've spent my entire career working in the startup world, scaling businesses to multi-7 and 8 figures. I built this podcast to share all of that knowledge with you and make your path to success shorter and easier. Tune in each week as I cover topics including financial analysis, cash flow management, holistic strategy, mindset, and more. Now for today's episode. About a week ago, the 2022 tax season ended, which means 2023 is almost over, and it's time to think about 2023 taxes and your 2024 outlook. You might be saying to yourself that you have plenty of time. After all, it's only September, but there are a lot of questions that need answers in the next couple of months. Some of those questions could be, how much do you need to pay by January 15th for estimated taxes? What should your revenue goal for next year be? Which products and services are the most profitable for you? Do you need to hire people, and can you afford to? And can you afford to invest in new software or other assets to grow your business? You can't accurately answer these questions if your books are a mess because your data is just not there. So let's explore a little deeper for each of these questions. How much do you need to pay by January 15th for estimated taxes? Technically, estimated taxes should be paid on a quarterly basis, but many business owners don't do this for various reasons. However, it is important to make sure that you've paid enough taxes by January 15th to avoid underpayment penalties. Do you know how much that number is for you? The amount could vary widely depending on which method you use to calculate it, and it's best to consult with your CPA on this to get the most accurate estimate that you can. But the first thing they're going to ask you for is your financials for the year. If they aren't ready, then any estimate could end up costing you in penalties and fees because you paid in too little, or you could end up paying in more than you needed to ahead of time just to be safe. In either way, who wants to give the IRS more money than they absolutely have to? What about your revenue goal for next year? This may seem like an easy question to answer, but there's a lot of data that should be considered besides how much you've sold historically or what you have in the pipeline right now. Understanding the costs related to providing your products and services is very important to determine what you'll need to meet your new revenue goal. Some questions to consider when you're looking at the cost of providing your products and services are, what is the inventory cost? Are you inventorying things on site for yourself? Are you using a third-party warehouse where you're storing inventory? Are you drop shipping products from somewhere? All of these costs need to be taken into account when determining what their cost of goods sold is for your products and how much cash you're going to need to maintain levels of inventory to be able to supply those products to your customers. Then you have to think about your delivery costs. With the cost of fuel just going crazy these days, understanding your delivery costs is very important so that you can continue to negotiate with your vendors and keep those costs down as much as possible. And what about your direct labor? Think about all the people that are involved in actually getting your product where it needs to go. If you're producing it yourself, if you're having to make sure that all these things are shipped, all these moving pieces need to be accounted for from a cost perspective. And then think about your total overhead. How much is your rent? What about your utilities and the rest of your support payroll, your accounting and your sales team and all the other people that make sure that everything gets done in your business for you? All of those things have costs that need to be taken into consideration when determining whether it makes sense to increase sales and by how much and by how quickly. And then also some other things that could be impacting you as well are things like sales commissions. If you do have a sales team and they are commission driven, the more they sell, the more you have to pay them. And yes, you are bringing in additional sales, but that sales commission is also going to affect your cash flow. So you want to make sure, looking at the timing of those things, that everything makes sense as you're building out that revenue plan for the next year. And then the other thing is you may end up hitting a capacity limitation. For instance, your sales team may be able to push the sales revenue that you want, but maybe your customer service team that's going to be supporting the customers post-sale doesn't have the capacity to handle it. Or maybe you're going to start hitting inventory issues where you can't provide enough stock on a timely basis to meet the orders. So these kinds of things you have to look at as well. And so from a revenue perspective, it's not just a decision of, I want to increase revenue 20% this year. You need to think about the costs that are associated with that and truly have a plan in place to address some of the situations that may come up throughout the year as you're pushing to meet this revenue goal. And if you don't have timely and accurate financial data that allows you to analyze those costs associated with increasing revenue, then what's going to happen is you're not going to make as much money on the sales as you thought. Your profit is definitely going to be less. And in some cases, you could actually lose money because you weren't anticipating costs correctly because your data was simply incomplete. Taking things one step further, how do you know which of your products and services are the most profitable for you? So you might be thinking about making changes to your products and services matrix for the year. Maybe you want to reduce the number of products you sell to concentrate your efforts, or you want to expand a particular service because you feel like it's working well for you. If your associated revenues and expenses are tracked appropriately, gathering the data you need for your analysis is pretty simple. It's running some reports, looking at things over time, thinking about feedback that you've received from your customers, things that they're interested in, looking at where the market's going, and you can make those decisions. If you haven't taken the time to structure your costs in a way that can be tied back to the revenue you want to track, this can be very difficult. One way to do this is to use the class or department functionality. So you can book direct costs to a specific product line. These are the ones that are easy. If I'm selling X product and I had to buy X product for resale, if I had to stock something in inventory, you can easily identify that cost is associated with a specific sale. But then you have to think about supporting department costs and other things like fuel and utilities, where you may want to break them out on an allocation basis so that you can see the overall cost to provide the product or service that you're evaluating. What about hiring people? Can you actually afford to? I mentioned capacity limitations in the last section. Labor is one piece of that puzzle. Payroll costs are typically one of the largest costs for a business. When you're wanting to hire, you need to understand how much it will cost to bring a new employee on board, including the recruiting costs, salaries, training, benefits, etc., as well as how much that new employee will be able to add to the top line. Even if you know how much it would cost and how long it would take them to get up to speed, you still need to take cash flow into account to see if you can afford to hire them when you need to. There are a lot of moving pieces in this process. Business owners tend to hire on an emotional basis. We feel the pressure, we feel the need, we know we need someone in this spot, things are not working. And so our first instinct a lot of times is we're going to open up a new spot, we're going to get a new person, and it's going to help us move all of these things through the process a little bit faster. And a lot of times it does. By adding new people to the organization, you do get that sense of relief as things can move a little bit faster. But when we're making decisions on an emotional basis, we're missing the financial costs associated with that. Sometimes we hire too soon, sometimes we hire too late. And so we can feel a financial pressure from those as well. There is some argument to be made that you do have to make an investment in your team up front to be able to build your organization, but there is a timely way to do that. And part of that process is by looking at the data associated with it and understanding if it's going to take 3 months to get someone up to speed, how much is that going to cost you? How do you build that into your budget, into your plan, so that you can get the relief that you need from a department perspective and from a process perspective, but still not hurt yourself too much on the cash flow side, and be able to get them up to speed as quickly as possible so that they can become a full functioning member of the organization and help you deliver that top line revenue as quickly as possible. And again, going back to financials, if your books are a mess, if you don't have all your costs booked, if they're not posted consistently, if things are just randomly in different accounts and it's messy and you can't see where all these costs are coming from and how they're being used to drive the revenue in your business, it's really hard to figure out how much it costs to hire someone and how long it's going to take a particular position to get up to speed and what they're going to be able to do in the organization from a revenue perspective because you don't have the data that you need. The last question I want to talk about today is similar to hiring employees, but instead of people, we're looking at software and other assets to grow the business. So let's say that you want to move from QuickBooks to ERP software like NetSuite because you want to utilize more advanced functionality to grow your business. There is a large investment in time and money for a project like this just to get it launched. And then there's training and lost productivity as your employees get used to all the new processes. Plus, all the changes that happen after launch because something doesn't work the way you thought it did, or you missed a piece of the process the first time around. And then iterations moving forward where you're realizing that the software does things that you didn't even know it did, and you can cut out 5 more steps, and then you can move things around, and you continue to build these efficiencies in the system as you learn it. But all of this, again, is time and money and lost productivity because you're having to learn a new thing. It's new, it's scary, it's complex. Even with great process documentation, it's going to take time for it to become the new normal. The same goes for when you're thinking about investing in property and equipment. You need to have the cash to pay for the project or the ability to finance it, and then be able to absorb the additional costs as the organization adjusts to new changes. So you need to have a strong understanding of your financials to evaluate the efficacy and timing of a project like this. Messy, outdated books just aren't going to get you there. We make, again, going back to these emotional decisions, we think, our software is getting in the way. If we could just buy one new piece of equipment, we could increase production. Things are going to get easier. We just need to spend the money. And in some cases, you may be right. Like, you may need a piece of software that does things better than what you have now. You may be able to get additional data and functionality and all of those wonderful things. And maybe adding in a new piece of equipment to produce more of your products to increase your supply to help deal with wanting to grow your revenue. That's also a good goal, wanting to be able to do that, but doing it without understanding the true cost to your business and how long it's going to take to get back up to capacity again is going to cost you money and could very likely cause you to have significant issues in your business if your financials are not where they need to be to make those decisions. There are so many more questions that we could cover here, but these 5 should give you enough motivation to start getting your financials in order if they aren't where they should be. And the good news is that small steps in the right direction can make big improvements in a short period of time. So here's how to get started. Number 1, write down why you want to get your financials in order. What will you gain by doing this? Maybe the 5 questions we talked about today were hitting really hard for you and you've been making notes this whole time, or maybe other things have been popping into your head that you've been thinking about that are specific to what's going on in your business. You're like, wow, I really need to understand this better. I don't know how much this costs me. I'm not sure where my data is. Write those things down, because when you start doing the hard work of trying to figure out where all your data is and how to organize it, you're going to want to come back to this list to stay motivated and stay focused on your reason why. Number 2, if you have a lot of changes that you want to make, you need to decide which ones will have the most impact right now and then create a timeline for the others. We can't do everything at once. You're just going to bring more chaos into the business. And so you want to be very specific and very intentional in which things you want to implement first. And my number 1 is, if your books aren't complete, get the data in there and let's see what you have to work with And then you can start making those changes, like maybe putting in a class structure, maybe putting in a department structure, maybe building some custom reports. But you have to have the data first. So I always suggest and prefer that we start with at least having a complete set of data, even if it's not in the most organized quite yet. If we know what we have, then we can move forward with how to get it organized in the best way for the business. Step number 3, I wrote an article a couple of months ago called My Bookkeeping is Really Behind What Do I Do? I'm going to link it down in the show notes. Go take a look at it. It's a 6-step process, all the different things that you're going to need to gather as you're trying to get your data into the system so that you can see what you have to work with. And number 4, if you want help getting your financial house in order, book a call with me and let's explore how we can work together to achieve your goals. I'll leave a link down in the show notes. When you're ready, click the link, book a call, and let's talk. Thanks for listening to today's podcast. If you enjoyed what you heard today, please share with your network and leave a review so our podcast can have a greater impact. If you have any comments or additional topics you'd like discussed on the show, let me know. Before you go, connect with me on LinkedIn and let's keep the conversation going.